Welcome back to Trading 360. I'm Nicole Petalides, live in New York City. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Thank you, gentlemen, for being here. Good to see you both. Alan, you know, we just had Mies Schneider on, and her pick, one of her picks was Lyft. You're bullish on this name, trading around $17 today. Your thoughts?
Well, again, I think we're on the same page here. This is a stock that's been bottoming out, and we've seen some bullish divergence, meaning new lows, but not new highs of volatility. And then we've been trading sideways for 4 months from 12 to 24. We're at the 17 midpoint right now. That's an important point. Oftentimes, once you get about the midpoint of a range, then it's going to get to the top range at 24. There's also a huge gap up above from 24 to 30. So that could attract the stock price if we get some short squeeze here. So a lot of positives. Let's get into some of the numbers, though. Lyft is 75% off its 2021 top. Uber is only 50% off its top. Lyft is up 50% after its July low, whereas Uber's up 75%. So Lyft hasn't kept pace with this same comeback that we've seen in Uber, and they're very much obviously tied together. So I'm looking at the in-the-money call, my stock substitution strategy, limited risk, the January option, January $15 call, trading for about 4.25 or so. It's a couple dollars in the money. And so if we get back just to the top of that range, that 24, that option doubles in value and gets 100% win.
All right. So that sounds pretty bullish to me. He's got a lot more positives than negatives. Tell me your thoughts, Ben.
Well, I would agree. It would be somewhat bullish. I think the key word there is if we were to get back to that upper extreme of that range, because as Alan mentioned, we're in a pivotal area right now around the $17 level. But shares of LYFT did get a lift this week. You can see, I should say, into the end of last week and beginning of this week, you can see from 14.25 up to 18.58. This is a very granular look at recent price activity. You can see a high conviction trade, though. Sideways consolidation, so limited in terms of any real indication that they're rejecting this upper level. It does seem more like acceptance, but again, I don't want to get too granular on this. So let's step back and have a look at the daily time frame here. You can see basically since, well, we're going back to March of last year, trend environment to the downside. It's very well defined. 4 areas of value that formed. This is the one that Alan was just referencing. Again, the upper extreme being 24-ish, we'll call it. Lower extreme, $12. Here's that gap that Alan mentioned. But when I see this, I don't really want to necessarily go out on a limb and be the first to buy this. Alan, Nicole, you guys have heard me say this before. I look for, well, at the very least, the breakout that Alan was talking about up and through 2022, 24. I think that would be that first sort of bullish flag flying. But for me, I mean, I'd have to kind of, I hate to say it, wait till we see something up and through the $40 level here before I really start to see this one turning around and negating or invalidating the working assumption that we're trending lower. I think the bears are going to look to fade this test of the upper extreme. Hopefully they'll get a breakout to the downsides, what they want. The bulls, again, want to see a couple areas get taken out that were established on the way down. A quick look at where things stand. Look at this stock, it's down 60% year to date. We're talking about just inching its way back above the 50-day moving average. Still looks like $11 below the 200-day moving average. Now, a good month for Lyft. Again, they're up 17% in September. But here you can see a stock that's come under pressure. Alan, it might be bottoming. I do see what you're talking about here in terms of the higher low. But for me, it's still just kind of in this random state here right now, accepting this most recent lower level.
Okay, that's some chart too. When you look at that gap down and you look at those moving averages. Alan, final points. I mean, Ben noted your if. Tell me your final thoughts on this one.
Well, Ben's always the if guy. He's the if trader. He wants to wait until he gets the confirmation. Whereas I'm comfortable using my strategy, my limited risk strategy. Again, I'm paying $400 for this particular option. I have a limited risk strategy. I'm essentially long from 15, which I'm totally comfortable with. And I've got 4 months of time for good things to happen. So whereas Ben waits for it to get to that 24, and if we get to that 24, my options doubled in value. I'm going to be selling into strength.
Alan, Ben works for the company. He has to be more conservative. Ben, any quick thought?
Yeah, well, again, I agree with Alan's strategy in terms of going out on a limb a little bit on this one and extending the time frame out some. But for me, I always feel like I don't have to be first. You guys do know that I like to see a little bit more confirmation, and that does unfortunately mean that you're going to give up a little bit in terms of your positioning, but it helps kind of solidify. And for me, more important than anything else, is it gives me structure to base the trade on to help me know if the market turns against me again when I'm wrong. If I start buying down here, we open up that door to the downside and start trading back down below the $11, $12 level. For me, I'm just kind of, hoping and praying that we return back to a scratch position. If we have structure that we're basing our trade on, if we take out that key level, I have an area where I know that I'm wrong and an area that I kind of align in the sand, basically. At this point, I'm just kind of hoping and praying, thinking and wishing and willing it to go higher, and that never really worked for me.
Okay, let's get to Chargepoint. I just was peeking at the stock and I saw that recent up move. 3 months, it's up over 40%. Just got some positive comments from the likes of Credit Suisse. Alan, tell me a little bit about Chargepoint. You're bullish too.
Yeah, this one has even more momentum from the bottom. So maybe Ben will like this a little bit better. It's been between 10 and 20 for this year, 2022. It's above the $15 midpoint, which is also the 200-day moving average. And as your last guest just said, that's in a very, very positive sign when you move above your 200-day moving average. We had a May low with bullish divergence. Again, the in-the-money option, the $15 call, I guess we're about 19 or so looking to break out. If we break out of this 10 to 20 range, that's 30. The $15 call is trading for less than $6. It's $4.50 in the money. It's got 4 months of time. And again, a 75 delta. There are many ways to trade. There are many ways to be right. It just depends on your personality and your risk tolerance. I'm not being terribly aggressive. I have the right to be long from 15. I've got a limited risk position. I have plenty of time, and it's going to give me a great payoff on a modest move in the underlying stock.
Okay. Your thoughts here, Ben, on this one?
Well, I don't have the 200-day moving average and I was looking at mapped out, but I am a little bit more along the lines of seeing some upside, potential upside momentum here. It is appearing as if it's starting to bottom, and we have seen some strength, as Alan pointed to. Let's dive into a quick look here at the more granular 15-minute time frame. And again, similar to Lyft, a nice bottom left corner to top right corner environment. We've been seeing some bid activity, which I think is important when you consider what the broader market's been coming under as far as some of the pressures we've seen over the last couple of week or so specifically. I mean, again, shares of CHPT have done fairly well considering. Let's take a look, the move up from 14 to 19, almost $20, and still holding that level right now. Look at this, up 6% as we speak, so a significant move to the upside. And then again, what I did notice here as I stepped away to the hourly time frame was a bit of a range coming into play, an attempt to break out. So yes, I'm very much along the lines of, right, this is very similar to what we just talked about in terms of Lyft attempting to break out to the upside, and still how we are have yet to do that, so that if word still coming into play. This one seems to be more like confirming that, right? I mean, we're getting some confirmation here and definitely solidifying the attempt to break out. Now, look at the range, though, 19 to 14. And I want to point out that this is really just part of a bigger range that we've been in, and that's the high from April down to the lows that we saw back in May. So we're talking 21 down to 8. So this is the start of something, to say the least. Higher lows coming into play, somewhat reversing the trend that we've seen, or starting to, I guess you could argue, in terms of the lower highs that we had seen. But again, you still want to see some upside movement here, some energy to the upside, some follow through. 21 is the next hurdle at this point, and above that, I'd like to see 27 through 30 ultimately would get, I think, some real interest sparked in this one, and some, new energy back into CHPT. But at this point, again, a nice move on the more intraday, the 1 hour, attempting to break out up through this 19 level. But the bulls want to get this one up and through 20 with conviction, 21 even with conviction.
Okay, so that's what the bull case would be if they made that move there, Alan. Final thoughts on this name, which falls into the industrials sector. Maybe it's a name that people don't know as much about when you talk about Chargepoint. Final thoughts, Alan.
Well, we're getting closer. We're getting closer to, this one's getting very close to its breakout. A breakout would be the confirmation when it moves above that 20 or 21, like Ben talked about. You have to think to yourself, are you comfortable being long from 15, looking at this chart, looking at this stock, having the right to be long from 15? I very much am. Again, that's $4.50 in the money. So it's got a lot of intrinsic value. And for me, it's a lot better to buy the in-the-money option as opposed to buying the shares, which tie up a lot more money.
Okay. Last but not least, turning our attention to energy, which has been the hot topic of 2022. And Occidental, obviously a great name, has been a best performer of all stocks, especially with the Warren Buffett backing. Now what? It's at 65 and change. Your thoughts?
Well, we've got to talk about the macro market, as your last guest alluded to. So if you look at the macro market, everyone's concerned, and we had a heavy unwind this week. All we did was we gave back last week's gain. So we're holding that 3,900 level in the S&P, which is the halfway point of this bounce from the bottom, which is very important technically. Now, so far, we've tested the lows of this week, but the volatility is lower. The VIX is actually lower. So that's some bullish divergence. Let's see what happens from here. But this will be the third time we've tested this 3,900. The first time was on the 6th of September. So this all ties into oil because we're looking at interest rates. Interest rates and the dollar. The dollar had a key reversal last week. Big new all-time, well, not all-time highs, new decade-plus highs, and had a lower weekly close. That's very destructive for the dollar. We haven't made new highs this week, so that's following through a bit. Now, let me wind this all the way through. Looking at interest rates, yes, we're raising rates. Rates are going to top out at 4.5% here in 2023. But then after that, they go down to 4%. In 2024, they go back down to 3.5%. So the markets are pricing in a relaxing of rates, which takes away the dollar power. All right. After all that, crude oil had a fake out breakdown last week. And Ben has taught me test and reject is something to look for. We tested the downside in crude oil last week, failed, bounced back up. We were at 90 just yesterday. So I still think there's a lot of positives in the energy complex, and Oxy's been between 55 and 75 for 6 months. 65 is the midpoint. So I'm looking at the $55 call. It's trading for about 15. And again, that's $1,500 for that option to control 100 shares versus $6,500 to buy the stock long. And this option for January has 4 months. It's only $200 more expensive than November for twice as much time to be right.
Okay. As we talk about this group here, what are your thoughts, Ben, as you look at this name?
Well, I always talk about how it's important to be time frame specific, and when I look at the two separate time frames that I have ready to present today, talking about a more granular intermediate 30-minute time frame versus a daily, you're going to see the difference in terms of what's playing out here. And this is what makes a market, basically, the approach and the window that people are looking to trade within. And in this instance, pretty well-defined trend environment to the downside, right? You guys were just talking about how the sector is seeing so much strength with crude oil and some of the activity that Alan was speaking to in terms of energies and rates in the U.S. dollar, the impact that's had. But if you look at the 30-minute, which we're seeing here, 30-minute candles going back to the highs that we saw back at the end of August, up around 77, you can see a very well-defined 6 areas of consolidation. Alan spoke to the fact that we're kind of in one right now, below 68, up above this $63, $64 level. But I also did, as I mentioned, took a step back from the 30-minute time frame and looked at the daily. And what a different tale the daily, the longer term tells us here. As you can see, Alan's mentioned that failed breakout, right? The attempt to go higher here and how we've worked our way back lower. This is an important area, again, kind of pivotal. Remember, we were talking about this earlier. Again, as far as weakness opens up a door for a retest of the lower extreme, continued supporter strength here is favoring the bulls narrative, the trend environment that we've seen to the upside. But again, here you can see this market here, shares of OXY, this stock has been very strong as it has been and continues to be trending higher. This goes all the way back to the lows that we saw, if you remember, October of 2020. So one more look at the daily time frame here and just seeing where things stand. Speaking of the strength, look at this, up 126% year to date. Now, struggling a little bit this month, down as we came off that failed attempt to break out here. But look at this, above the 200-day moving average. It's well below at 53. Look at the strength we've seen. It's above the 50-day moving average, just barely above it right now. But again, really speaks to what you guys were pointing out here as far as energies. And, unfortunately, it sort of ties into that inflation narrative, and it doesn't necessarily bode well for the landscape that the Fed's been forced to navigate ultimately. And the longs, the bulls have been rewarded handsomely for holding on to this one. And again, the bulls continue to look for strength to remain here.
Yeah, and that Michael Lee was on with us yesterday, and he just swore by this group overall. He's done so well, just, really leading with energy of late, of the last year or so. Great to see you both. Alan, we love when you're able to join us. Ben, amazing charts as always. Thank you for the big three today. Alan Nuckman, Chief Market Strategist, BullseyeOption.com, and Ben Lichtenstein. Thank you. Coming up next, it's time to spotlight FinTech.